André. Welcome.
Hello, Steve. How are you?
I'm
Mr.
good, mate. Trying to get some rest to charge my batteries.
Yes, I guess so. Good luck with that. Good luck with that. All the best.
Thank you, mate.
My screen. I want this one. Okay. So you were talking about West Texas oil.
Yeah, it's a good place to start from, actually, since we're talking about that and the possibility of rejection. What do you think about it?
Well, I don't think there's a shark there, so the pattern is completed. So usually on those situations, I don't think too much. I can think about the probability to form the pattern or for the pattern to complete at some point. But at this point, we are talking about a potential rejection to this Fibonacci level, the 161.8 extension. If the price keeps rejecting this Fib, there's a possibility to trade at the default targets at least a 50% retracement. This will put the price retesting this previous resistance. It will turn it into a support and eventually a bounce from these levels. I will not be surprised. Obviously, we need to well, I still believe there's the probability behind the pattern. So on those cases, I don't think too much, Steve. It's there already. I don't need to forecast or to project anything. We are now facing that possibility. Published before, very similar as all the others, actually being very productive. Actually, something is missing here. As we can see, oil has been very constructive in terms of harmonic trading and harmonic patterns during all these corrective structure, if we may call it that way. So we have one first impulsive momentum, and this is a huge sideways process. I also was thinking and we need to go into a daily time frame. I believe I don't have these draws there. On a daily time frame, I was expecting to see oil trading a few points higher.
Can we still hit that blue line, Andre? That it looks like you have the same line I do. It's kind of like a megaphone.
This blue line here. This is like it's like an expansion.
Expanding, broadening formation.
Yeah. There's a lot of names we can call it, but let's say higher highs and higher lows. So for people to understand, the price action is printing higher highs and higher lows. And during this sideways moving process, we expect something like a 5 or 8 waves structure inside this huge process. Usually I search for a 5-wave structure inside this megaphone formation. But at this point, we are, as I said before, we are facing this specific Fibonacci level. It's a small relief here. Obviously, this is a daily time frame on a 4-hour time frame. This is the trade. The trade will put the price trading just a few points below, but that may also end up forcing the price later to retest the lows, the previous lows at 54.68 or around that level, previous structure support, or the pivot between this previous structure resistance and support level, and that can also form later one eventual heads and shoulder formations, which needs to develop. We need to break out. We need the right shoulder. We need a breakout of the neck. But if that happens, a reinforcement of this level, this pivot zone as previous resistance, later as support, a bounce from this level may turn oil into a bearish structure if the pattern gets completed. At this point, I get focused not only on this specific pattern, but also the previous daily support below at 54.37. So at some point, I will not ignore the possibility to retest these lows. Obviously, we have also the 200 moving average approaching from below, actually acting as support at this previous daily and 4-hour support level. I will not ignore, actually, the market is now trying to break below the most recent lows. Previous daily resistance printed last first day of March. Weekly resistance was printed a few days earlier, and we are now trading above those levels. I believe if the market, if oil decides to recover, not recover, but to fall below those levels, it will increase the probabilities to trade even lower. So the pattern is formed as published before. I published the pattern before the breakout of this resistance level above on ForexAnalytix. So for those who are at least being there, you are already familiar, and you already know that there's that pattern completed. SEC, not one of the charts that we used to cover, but I found some interesting behaviors here, and that I want to share with you. First of all, the weekly time frame chart. I published this not inside the ForexAnalytix, but I shared this chart before the pattern gets completed at 224 extension. So I was expecting the formation above this small sideways process. I was expecting a new highs to form this 224 extension shark pattern. The default target for the shark will usually search for the 50% retracement as usual, and a 50% retracement will at this moment, and based on a simple projection, will put the price searching for that 200 moving average. That can happen a few points above. The 38% retracement, also a nice position. Previous structural resistance and support levels at 38% retracement. This is a weekly time frame on USD SEC. If we go into a lower time frame, 12 hours time frame chart, we have this false breakout above and a violation of these previous structure supports. If the price decides to break below this level, I believe they will search for one of those extension levels. Usually we will search for the 160.18 extension by default as the golden Fibonacci extension, as potential reversal Fibonacci level. And if the market fails to use this level as support above the previous one, we will violate that support, the previous support level, and eventually the 224 extension a few points below. Those are the shark pattern completion points. Note that inside this huge range, we can see the market reacting inside this range. We don't need the price to bounce specifically from those ranges, from those fibs, but we can see some market reactions inside a huge range between the 161 and 224 extension. Usually, obviously, I will search for an engagement if I need to participate in this pair. I will search for a specific level to search for entries, obviously, but we need to consider this range as potential reversal box range. And because we also cover USD NOK, and this one has been published before this fall, so I was expecting NOK to form this pattern a few points above. I was expecting also the breakout above this previous monthly resistance. This resistance has been printed last December 26th. So I was expecting somehow the price to hunt all those stops above. Usually they do that. They will break those major resistance and support levels, hunting those stops right above. But this time they decided to, okay, this time we will not hunt them down. They respected the 127 extension from this first swing. So this first impulsive momentum extended at 127 extension, and the market has decided to pull back. So this is pure speculation at this point. Actually, I can use this again. So this is just a copy of this previous behavior. If I move this here, and if I mirror that behavior, and if I set these levels here, I will not be surprised to see NOK pulling back from this level, forging one eventual heads and shoulders formations with the head printed at the monthly resistance. Obviously, the right shoulder can be printed with limits at, let's say, if we need a limit to search for the formation of the right shoulder inside one eventual heads and shoulders pattern, I will use the 78% retracement. And by manuals, this is the limit to form the right shoulder. So I will not be surprised to see that happen. I hope not, because I know that we have a pattern in play shorting NOK, and I truly believe there's room to trade below on NOK. But this is what we are now facing. This is previous daily supports. Eventual bounce from this level will not be surprising. And obviously, I'm telling you about the eventual formation of the right shoulder at 78% retracement, but we can see that right shoulder being formed below, and actually let's consider that possibility too. So a right shoulder and then a violation of the daily support, and that will trigger the pattern short opportunity, and that will eventually force NOK to trade even lower. What we have more, I'm completely away from most of the yen pairs. We have this. I was checking today this to see if I see something on dollar versus yen, and actually it's only a 2 hours time frame chart, and one eventual. Actually, it's trying to break below this. We need to go into a lower time frame, 1 hour time frame, eventually into a lower time frame. This is kind of an heads and shoulders also. And well, 78% retracement. There's a pattern at 88% retracement, which is the default bearish BAT pattern. But the market has started to react from the 78% retracement. So at this point, I doubt.
Free drive there, Andre, on the BOJ last night.
BOJ, you need to remember.
Bank of Japan.
Bank of Japan, yeah. And at this point, well, if they keep printing new lows, and specifically below these supports, I believe they will keep trading even lower. Obviously, we have patterns above between FIBA extensions, the 113 extension, the 168 extension, that will put the price retesting these major. Let me increase this time frame. The 168 extension at 113. That will print the crab pattern at 168 extension. So this is kind of a projection for more bullish upside momentum. And
okay, so not a lot of conviction on this. Going home on the weekend, Andre. I know that there are things that you probably have, that you're waiting for and stalking and see. So in the end, if you don't know, I mean, sometimes the right trade is a no trade, right, bro?
Oh yeah, completely. I prefer to stay away than sometimes to try something, because if I can't see something immediately when I look into my chart, it's because there's nothing there to see. Eventually, you can see other things that I can't see at this point. But based on the specific technicals that I'm searching for, I can see, I I don't feel comfortable looking to those yen pairs at this point, so I prefer to
Could I be selfish and say that the S&Ps tried to take out the highs made earlier in the week, NASDAQ too, and they're coming off? I'm wondering what you have there, if there are any harmonics there.
Let's go into S&P. I have a short position on S&P from these highs. Actually, this is a partitioned position because I shorted at this first high, and the market has recovered already to my entry level.
Did what I did.
Okay. So at this point, I'm still holding a small portion of this trade. I still believe there's room to trade below. There's a daily time frame chart that I shared among our community, or a 12 hours time frame.
Oh, I remember this.
Okay, this is the default bearish bat pattern at 88% retracement. It doesn't look like one, but we have all the perfect conditions for the pattern to work. In terms of, at least in terms of Fibonacci ratios, we are talking about swings, and between those swings, we need specific Fibonacci criteria that will validate or not the possibility to form the pattern at the specific Fibonacci level. So at this point, we are trading a few points above, considering a daily time frame. We are trading a few points above the 88% retracement. This is the default completion point for the bat pattern. I still believe there's room to trade below, retesting these lows. But it's a pattern, as many others, that sometimes will fail, sometimes will work. There's something that I want to remember you, because we talked about this earlier, and let me delete all these draws. I told you I told when last December, when the price was printing those lows. So based on the Fibonacci criteria, or the Fibonacci levels that we have here. So we have the market extending below almost at 113 extension. Actually, the market has nearly surpassed the 161 extension. And I said to you, okay, eventually, based on those Fibonacci criteria that we have, if I need to search for a pattern at new highs, and based, again, it's just not based on any fundamental approach. We can talk about some stocks that can drive S&P to those levels. Eventually, I have a few stocks, Activision. Well, I can Microsoft. We have Nvidia. I have a few. Yeah. I have a few stocks with not only for S&P, also for Nasdaq. Yeah. You have a few stocks projecting some, which is possible to project patterns at those levels, based on the 3,200. No, this one it will trade a few points higher, 200% extension.
3,130.
Exactly.
Okay.
Exactly. So yeah. This is the pattern that I will.
Maybe one more break like you're looking for with this current active pattern if it rolls over, and then a blast off.
Exactly. That's exactly what I'm expecting. So I still believe there's a possibility to retest those lows.
And I'm hoping.
And then,
which is dangerous.
I don't want to be bold on these and to exaggerate on my view, but man, I can see a default projection, a symmetrical projection that will put the price around the 168 extension from this previous pullback, or this deeper pullback here. The pattern will complete a 200% extension. Yeah. Eventually the 224 extension a few points above, but let's get focused. Let's keep focused on the 168 extension, because usually that golden Fib ratio will produce some pressure there. And if somehow we are holding a buy position there, I always suggest, if you are touching the 168 extension, at least start to partition your trade and adjust your stops at profit, or whatever you need to do to secure your capital as soon as we touch these levels. So
I'm so glad I asked about this.
Yeah, but I was thinking about to show you, because I know that you have special interest on S&P and Nasdaq and EWM and ETFs, and also so.
Only things I have money on.
Yeah.
It kind of makes me interested. But
Of course,
especially when I'm going through a drawdown, I'm looking for, I'll go looking, and I'm sure everyone does this. You're not sure about the trade.
Of course,
You ask other people, and maybe they give you some hope because they're, seeing something that could still play out. So thank you for giving me hope.
That's the precious of being inside ForexAnalytix, for Dale. No,
Yeah.
I believe it's an extremely enjoyable and I don't have a description to I don't have words to describe also actually what I feel with our team inside ForexAnalytix. It's amazing the dedication of people.
How about LOVE?
You need to translate that for me.
Hello, yeah, all right, okay. Anyway, love makes the world go round. So, Andre,
exactly.
could I ask you for one more, and we could wrap up the day?
Of course.
Where's your head at in gold?
Gold, very similar as Steve has mentioned it before. So let me push that chart for you. Another one that I still inside, so I still positioned on gold from above. So I shorted the market at 1342. This previous weekly and daily resistance printed above, few points below. We entered the trade. Great pip, but the market has failed the 38% retracement. And let me push a few minutes back or a few seconds back, and let's go into silver, because beside gold, isn't it? It's stronger, but not only. It has completed the specific pattern below. Right. And this one, for those who are subscribers inside ForexAnalytix, you already know about this pattern. So this is the sharp pattern at 161.8 extension. Let me delete this one because I didn't share this possibility. Previous daily support, previous resistance, 161.8 extension, and the potential reinforcement of this ascending structure trend line as previous support, or as eventual or a virtual support, as I like to call them, before the reinforcement. So I need the price to reinforce this structure trend line to call it a trend line support. So this is a support, 161.8 extension. I was expecting this pullback, and I said to you last week, I will not ignore to see gold trading above, retesting the previous structure support. This is silver. Yeah. At the same time, I was saying that regarding to gold, silver has completed the pattern and it has bounced, and it's now forming one eventual and for now also virtual edge and shoulder formation, which requires, first of all, the violation of this previous weekly support. The market has recovered above this weekly support, which means something, or which can mean something. The price can bounce from here and print as one eventual, or at least retest the highs, and the probability to print as, let me try to push this tool, to print as a bat pattern. If the market rejects to trade lower, obviously to bounce from there and to search for the highs that will put the price 1610, printing a default bearish pattern at 88% retracement. But again, we need to observe the market conditions once the price approaches those levels. At this point, I see the eventual formation of a right shoulder. So what this means is this is the left shoulder, we have the head, eventual reinforcement of the previous support, right shoulder, and we need a violation of this daily support position at 1498. A violation of this support will reinforce this idea, and the default projection of this pattern will put the price retesting this monthly support. This is silver. On gold, it's very similar situation, but it's note that, how can I explain this? Let me push again this back. Look at these charts on a daily on silver. Right. So silver monthly resistance is printed above. So silver has printed kind of 50% retracement, golden FIB. I'm not sure. Let me just.
Yeah, I like that upper target you have at $17.
160 on 8 extension.
Yeah.
That is another level that we will talk about that later if the market offers that,
right.
that possibility.
Okay.
At this point, this is this is 78% retracement. Let me check just this Fibonacci. So this is the golden FIB. The market has rejected the golden FIB on silver. At the same time, gold has pushed the 88% retracement from the monthly resistance. So let's say the silver has been pushed from the bottom into the golden FIB. Gold has pushed up into, so let's say the silver chart is a shark pattern at confluence at the golden FIB, and we have the default bat pattern at 88% retracement on gold at the same time. Actually, at the same time, the market has printed this bearish bat pattern on gold. We have a double top on silver, and then they both fall from those highs. So I still expect gold to achieve the minimum, the Fibonacci level, which is a 38% retracement. Actually, the market has failed that Fibonacci level, sorry, just by a few points. I still believe that can happen. It may take us a few days for that to happen during the next week. Eventually, let's say a violation again above this 4 hours resistance. Eventually will trigger the price to trade even higher. But until there, I still believe there's room to trade. I'm not sure what's happening with my trading view chart, but I believe there's room to trade below on silver and also on gold, and similar on copper, because you mentioned before, and I'm completely synced with your approach. I'm not sure if I have a 12 hours time frame chart here. Not yet. Yeah, at this point we have only these daily, or let me push this. I'm not sure if I have a weekly.
Oh, yeah, that's a weekly. I recognize it.
Yeah, that's a weekly time frame. Okay. 88% retracement from this bottom, default bearish bat pattern, double bottom, and we are now trading above the bottom of the, trading above the next zone from this double bottom. So usually when I see a double bottom, I project a retest of this bottom, the neck. So I need a retest of this next zone. First things first, I will not ignore a bounce from this level, and the eventual 2618 by default. I will wait for the pullback to the golden FIB, and this, as always, and as mentioned before, can trigger into a default and symmetrical ABCD pattern that will put the price at 78% retracement from these highs, and that will print also another and eventual and virtual for now default bearish bat pattern a few points above at 88% retracement. We need to wait for the 88% FIB. At this point, it's completely nonsense or completely projection that makes no sense for now. We need to wait for that to happen. We need to wait for the price to approach those levels. At this point, I will not ignore the possibility to retest the next zone from this double bottom. The formation of a 2618, if the price searches for this level and if the price starts to bounce from the golden FIB, it may offer a nice opportunity to go long with stops positioned below the double bottom. We already know the validation of a double bottom with the broken neck validates the pattern as a potential reversal. So if the price is trading lower at this moment, we expect the price to trade higher. That's what the price is doing. That doesn't mean the price will reverse at some point that will print new highs. No, but it should provide some interesting, at least a three-wave structure. It's a minimum that I am expecting. So we have a new low below the previous one. One first swing, a second wave, and the third one, at least a minimum third one to at least or to retest these highs or a new high. Yeah.
Okay, what a great presentation. Once again, you never fail. I mean, you know, I have clarity on the metals now, definitely in the crude. So thank you so much for dropping in, Andre. It's always,
thank you very much.
You know, it's always edifying. Okay, the word I would use is thank you for coming in and showing your stuff. I love your work, and it's helped me. It helps me all the time. So let it help you, Face listeners, and everyone have a great weekend. You want to say the tagline, Andre?
Don't just count your pips, count your blessings.
Okay, and you know what, Andre, working with you is one, and calling you a friend is even more so. So Anne, you're very welcome. I'm glad you enjoy our service. Consider being a subscriber. Marius, you as well, and everyone have a great weekend. Remember, your best trades for next week are planned over the weekend, and we'll see everyone on Monday. I'll have a nice interview lineup again next week, and thank you for your support. And the way to say thank you, if you're just a member of F.A.C.E, is to subscribe. And it's going to edify you and also give you an edge in the markets you don't have without being a subscriber. Guarantee it. So,
and Dale, I'm sorry to interrupt you. Another way to say thank you, and this is just a language from Portugal. It's obrigado.
Obrigado. Obrigado, Andre, my trading warrior brother.
Thank you very much, and have a nice weekend, everyone.
Okay, obrigado, everybody. Have a great weekend. See everyone Monday. Adios in Spanish, but I'm going to start using obrigado. All right, bro.
It's Portuguese.
Okay, I'm going to use
in Spanish. In Spanish, it's gracias.
Oh, okay. All right. Yeah. See, you know, I'm just an ugly American, Andre. All right. I know one language and not that well.
A beautiful people. Thank you. Thank you.
All right, bro. I'll see you.
Thank you.
See you, everyone. Take it easy. Adios. Obrigado.